Welcome to day 5 session. And today, what we'll do is we'll start with drawing trend lines and what it exactly means. And we'll also talk about trades because today is a day where you can see 2 days I have been invested in gold. And on the third day, you can see there was a breakout and price eventually hit my break even. And what does that mean for a trader? There's a lot of psychology involved when you see your trades going in a drawdown for 2 days, it's down there. There's a lot of things going in your mind, and you're definitely affected by it. And when it hits your break even, that means you didn't make anything on it. That is a deeper grave. It's painful when you see your trade not making any money and you have invested your time, you maybe want something back, and that's when you make mistakes. So we'll talk about that as well. All right. So I just saw the screenshot on Telegram. The 4-hour SR looks good. The daily one looks good. The 4-hour again looks good. Yeah. And Sadia, I've been looking at the images. The current one is very much improved. There is a tidbit, a little mistake here and there, but eventually that will improve. I'm sure of that. And Yasir as well, the EMA lines are perfect. Shahid, Chesta, you guys need to work on this. Send me the screenshots because it's important. If you really want to be successful, then do it. It's important that you do that. Because these guys have been sending me images back and forth, whatever mistakes they are doing. And based on that, I'm also giving feedback, whatever I can. And that is, in fact, helping them as well. You entered buy at 4919. What should I do now? Hold or exit? So gold, I am staying out of it, Shahid. Reason being, the NFP news came really good for the USD. Right here, you can see the numbers. The NFP news came really good for the USD, and price, what I have seen is eventually, in the next sessions, follow the fundamentals at some point, right? So it's not 100% possibility that price will not go up, but right now the fundamentals are with the USD, so I don't know what's going to happen next in the market. Rather, I am going to sit out from the market Thursday, Friday. I'm not going to trade. Monday I'll be back because I'm done with trading. I have taken 3 trades in the week. One hit SL, one hit break even, and one gave us 1:1. So I'm done with trading. I'm not going to trade further. And eventually, what that will do is it's going to help me out in this way. When such fundamental news comes in and you let the price do its thing for a few days, you get to see better direction, better price action. Rather than entering now, you would see price is fixing up and it's making its mind. All the buyers and sellers are setting up their direction, and then when you come on Saturday, that's when you are able to see the charts clearly, and then you can analyze the markets. Based on that, you can predict the movements. Right now, predicting movement between week is not a right thing. For a swing trader, it's not right. All right, so we'll start with trend lines. We'll see what we can find, and based on that, we'll figure it out. So right here, you can see there is a trend line, right? This I caught this trend line yesterday on the 30-minute time frame, and this was a good trend line. The only thing was the price retested it, came down again, didn't give a proper close below this, and price moved up. If you're trading lower time frame, you can do something like this: price coming down, closing below the wick of this, and then you get a confirmation that the price might go down now. Okay, that's a confirmation entry, and then you put your stop loss around here and then take an entry. This one, it was completely different. The price closed right here and then moved back. And there was a clear reason. This was a good support, right? You can see as soon as I entered, like later in the day on Monday, or yeah, Tuesday morning actually, Tuesday's first session, in fact, Asia session, price came down in the first hour and then it took support from right here, and this was a very huge candle compared to all of these. So huge candle came down, took support, and then moved back up. That's why you need to have support and liquidity areas in your trade. So what happens is most of the people, when they draw lines with support, what they do is, I'll show you this. Let's move to a pair which is more of working out in a zone. Yeah. So what they do is they try to capture the close candle closes. Okay. So let's say if I do something like this, I'm trying to capture candle closes right here. So I have two touches, three touches, right? Three touches right here. But what happens now is I'm not capturing wicks of these areas. And for example, this one as well. This is important. These wicks are very important. This shows you that how much the price can go down. So these wicks are very irregular right here. This one is a little big, this one is smaller. And then we don't see a wick right here. But here it's very near. This wick right here, this wick right here, this wick, it's very near. And this one as well. So when the pair comes in, when the price action does this, that it goes up and it takes support and then it moves up, that gives you a confirmation that it is moving up on a smaller time frame like 1 hour. What you do is you take an entry and make sure you put your stop loss below this wicks, so that stop loss is not huge. The stop loss right here is not huge. And that also means that when the price at any point that some news is coming in or any fluctuation in prices, maybe slippage is coming in, what happens is price comes down to this area again near this liquidity levels and then it moves up. So you avoid getting your stop loss hit in a very simple and easy way. I hope you're understanding this. Wicks are very important. This gives you an information that how much the price is going to move and how far it is going to go. When you see repetitive similar wicks, for example, right here, there is a wick, right here, there is a wick, and right around this area only, there is a wick right here. So you get a clear idea that where your stop loss should be. If I keep a distance from these places, giving a 10% stop loss or something like that, it's very hard to hit my stop loss. Right here as well, you can see the wick went a little further deeper in here, but that's again a small difference, right? So when the price did this, that also gives you a confluence. Let's say you haven't entered a trade yet, and when price creates a wick around here, around these levels, yeah, around these levels, and then it moves down, that gives you a confirmation that now price might not come back till here because it has created the wick that it has been creating, and it is pushing down from that right place, that key level area. So these areas, even though we don't mark all of them, it's important to understand them because that gives you a good trade where your stop loss will be very difficult to get hit. I hope this is clear. Am I making sense? So USD CAD, we did this, exact this, price action, we have this. You can see from right here that price, whatever trade we take, it's more about history. So I knew price might easily come back to this level, to this level. That's why until today, I didn't move my stop loss. If you see generally, when the price touches around 1 is to 2, I give you a stop loss which takes a profit at 1 is to 1. But I could see the price action. The price can come majority of the time these levels, these are liquidity areas. Once price creates a wick around here, I would have put a break even after that. But because it was an if news, I moved my stop loss to this level because now at any point the price can easily push towards upside easily. It's just you can see right now 1 hour was bearish and now it's bullish. 4 hour time frame is bullish again. You can see this is your lower high, this is your lower low, this is your lower high, this is your lower low. Now the structure broke from right here and now the market is bullish. Also, when we mark lower high and lower low, what we do is we don't count wicks. Okay, when you're drawing lower high, lower lows, or maybe higher and higher lows, even the lines, we end up creating lines like this where it closes right here, and then this one is two candles inside bodies, and then again price goes around here, and then this, and then price goes around here, not here. Okay, just on the close of the candle, and that's it. That's how you define what's the low. This area, I'll zoom it a bit. This point is nothing, but this point is okay. This is your higher low. Yeah. If you start counting weeks, what will happen is this now is bearish according to this because the wick is below this, and if you have counted this as higher low, then this broke structure. But the fact is, it didn't. It is this one is higher low, higher high, higher low, higher high, higher low, higher high, and the structure was broken right here. So if the price closes below just this price, maybe a little bit like this, when the price closes right here, then you say it's a lower low. And second thing, I've been seeing in the screenshots that when you mark this up, this one is higher low. This one is higher low. And maybe there's a structure right around here. Let's just imagine there's a structure like this. Okay. Higher low, higher high, higher low, higher high. And now this one right here. And then the price does this. And then price does this. So both these points, okay, these are not higher lows or anything like that. Okay. This one is definitely lower high, but there's no higher low now because as I have said before, a higher low cannot exist without a higher high. So you only say there's a higher low when there is a higher high, or you only say there is a lower high when there is a lower low. I hope this is making sense. All these lower high and higher low values are created based on the low creation or the high creation. And the easiest way to navigate this is, let's say you definitely understand there's a lower low right here. Okay. If there's a lower low right here, where is the lower high? You just move back in the chart and then you see where is this turn coming in. Is there a turn coming in? Yeah, right here, there's a turn coming in. So there's a turn right here. And then you see, okay, this is the lower high. The first turn is your lower high. From here as well, when you're coming up, okay, this is your higher high. So you go back for in the price action and you see there's a turn coming in right here, right? There's a turn coming in. So this is your higher low. I hope this is making sense. This is very important, guys, very much important because this is kind of going to be your bread and butter. So initially, there is a lot of mistakes, but you need to fix that. You need to work on this, work again and again, take as much time as you want. Just make sure you do this. And also, for example, I told you I'm not going to trade Thursday and Friday, so it's a good strategy, right? You don't need to trade every day. Once you're done with what you need to do in the week, you need to step back and pause from the market. Don't look back in the charts again because let's say I was in a trade of $1,500 profit, right? $1,500 profit today itself. It was more than 1,500 and now I have closed on 1140. Now seeing that price going to 1,500 and then coming down to 1140 is painful, of course. But does that mean I'm a robot? I don't feel emotions. I feel all of these emotions. The only thing is I don't react to it. You don't have to react to it. Instead, what you do is you take steps that's going to stop you from reacting to it. I don't want to make that money back today, tomorrow, or day after tomorrow. I definitely want to make that money back, but only next week. That is important for me because I know at some point I'm affected where I've seen a drawdown. I was doing really great in the challenge and then price moved down because of the NFP. It is kind of a taking loss, a huge loss for my trade. But that revenge of taking back that money is how you start losing the trades. It's a very simple way of, being unsuccessful. So if you want to be successful, make sure you take your pauses, make sure you develop a strategy where you take pause from the markets. You don't have to look back in the charts. You don't have to trade again as soon as you hit your stop loss. Instead, you should not come back to the market for a day or two. So that's why I have only like four pairs I always analyze on the weekend so that I don't get a lot of trades. If I keep around 10 pairs predicted, and out of that, six is doing what I want from the price action, and if they are doing exactly that, I might take that six pairs throughout the week. Now, first one hit stop loss on Monday. Second trade gold gave me an entry on Monday. And then this one came in, I guess, yeah, again on Monday, all the three pairs on Monday. But that was part of what I wanted it to do. I had analyzed all of these with you, and that was it for me. Three pairs, that's it. I'm not going to trade further, because if I do that, then this is going to be a habitual thing. After taking a loss, I'm going to take revenge with the market, and that's only going to affect me. I hope you're able to understand this, because this is very important, and a lot of people do this. A lot of people, a lot of traders, they always think, because when you come to the market, when you look at the charts, for example, let's say Euro GPY, let's look at Euro GPY, you can definitely see that price has given a breakout towards downside. I have seen that, and price is definitely giving me this trade, right? There's a daily support broken. Price has taken liquidity from around here, right? And now the price is moving smoothly down. Now I can take this trade and try to make money out of it. But if you see this, there's another support right here, there's another support right here. There are so many other levels, but I am able to see this trade because right now I am in pain, and I want to make that money back again. So don't try to make that money back. This 100 to $10,000 challenge, what I'm doing, it's just a marketing gimmick. It's not what I do for my life. I don't want to do this again and again, right? It's actually a huge pressure for me when I'm doing that, because I'm risking huge amounts based on my account size. I'm playing with my psychology at the end. So the best way to make money is making sure that you take low risk. Even if you have $1,000 in your account, I won't say in your broker account, I won't say go and do $10 trades, but divide your trade in a way where you risk only small amounts and you never increase that size. For example, let's say there's a very good trade coming on gold, this one, right? But right now the lot sizes are so big that your stop loss might not, cover the exact $100 stop loss or something like that. What you now do is you take that entry maybe with a $170 stop loss, and that's where your psychology is down the drain, because now you took a stop loss like that. Imagine that price action hits your stop loss. Now you lose $170 in one trade instead of two trades, right? So if a pair is not fitting you, if it's not fitting your stop loss, don't take the entry. Gold and silver work in a different way. Their stop losses are very different. They don't accommodate all kind of small account sizes. So make sure, if you're on a small account size, don't try to trade XAU or XAG. Instead, try different pairs. There are so many pairs out there in the forex world. All right. Again, we said a lot now. Let's get back to trend line. So trend line is something, I would say, it's exactly as support. So what support does is, this is a horizontal line, right? And what EMA does is, it's a dynamic support. It moves with an exponential way, and it covers the prices depending on the speed or volatility of the candle, right? But trend lines are lines which are slant, and they act as support and resistance in a similar fashion, in a very similar fashion. You can see the price action right here. The price acts in a very similar fashion, and there's a myth where you only draw one trend line or two trend line, right? But I have taken trades. If you have seen my YouTube videos, I've been asking you to. So there I have explained the exact strategy as well of trading trend lines. So let's say we have a trend line right here. Let's do this on a daily time frame actually. Now there's a daily time frame right here. Okay. If I copy this line and I paste it again, I can definitely find more support. Right. I just pasted it and it dropped in the right place. You can see there's a support right here. 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 Inside the trend as well, inside the trend as well, you can see there's perfect candle closes on the trend line. There's perfect candle closes around this trend line, right here, so many places. So it's not like you just have to create two lines. What you can do is you can build relationship. So having too many lines is going to only sometimes confuse you. But if you're clear, if you use the lines for the right stuff, it's going to be very helpful for you. For example, right here, if I think of it as a support, I can use it to trail my stop loss. I can use it when I see the price has moved and touched here and then it's going up. I can trail my stop loss right here. And if the price comes down again, it's done the price action, it's moving up again, I can trail my stop loss right here or maybe around this level, right around this level. And then the price moves, I can move my stop loss accordingly, finding more support resistance, more key levels, and according to it, moving my stop loss. And that way, imagine how big a trade you can take. If you work with right support and resistance, you can scale your trades without setting a fixed target. For example, if you're taking a trade right here, you might put your target right here. But with a trend line, you can put your target on the trend line. The price didn't touch here. So of course your next target is this. And then price didn't touch here, your next target is around this. And then it keeps moving. The price touched here, you're out of the trade. So I take a trade right here around this place. Let's do it right here. And I put my stop loss around this level. Okay, first touch is here. So I get my trade around, my profit is 2.71. And if this trade continues, if I still hold, maybe I'm just not keeping my TP and I'm just dragging my stop loss, I could have gone as far as around this levels. This one, first TP, second TP. Right here, if you see, if I would have been trailing my stop loss on these levels, my stop loss would have been hit around here, around here. So I got 1 is to 3. So these are daily time frame. Of course, we don't exactly trade on daily time frame. We go down to smaller time frame. So of course your stop loss is not that big. That means instead of 1 is to 3, you would have gotten 1 is to 6, 1 is to 7, 1 is to 8, something like this. That's a huge profit. That's a very huge profit. And that is why you need to understand price action the way the market shows you. You need to understand trend lines the way the market shows you. This is the thing which I have found by myself. And most of the tutors, what I have seen is they just draw this line, they draw this line, and that's it. But I figured this out that there are multiple support and resistances which plays out in a trend. Maybe there is someone who have also figured this out and made a video on it, but I hope you're catching this because this is completely private information. No one is talking about this. Now let's look at a pair which is fresh and try to find a trend. I hope you got this. Please drop a message in the chat if you have any questions on this. All right. Now let's delete all of these lines again and go down to 4-hour time frame. Trends are very easy to spot. You can definitely find a trend when you see price actions where there's one touch, two touch, and then you see there's a third touch, something like this, right? And definitely when it's a downtrend, you need to first catch the upper trend. I'll just zoom it a little and you see there's a proper slope coming in right here. This price has been acting as resistance in a slope, right? If I draw the line right here and I draw this, imagine how many times you could have taken the same trades. You can see there's a trend right here. Now you see when the price came up, a retest. So this gives you a confirmation of what the price is doing. Now what you do is you draw a trend line. I'll just copy paste this and see if it's making sense. All right. All right. This is not making the same angle exactly as this. So what we'll do is we'll draw another trend line. Right here, there's one more line. And then there's a proper distribution like this. All right. So you see the confirmation that this slope has been acting as resistance. What you do is you just extend the line now on these places. Like extend it as much as you can because right now the candles are printing. When you come here, when you see a price action like this, you can see the candles are printing right here. So what you do is you definitely saw a touch right here, then there's a touch right here. And when the price is coming and creating a touch right here, what you can do is you can draw your bottom line now, right? On the candle closes or whatever, right? Now, based on this, let's say this was a 4 hour candle, and definitely there's a rejection, there's an engulfing candle, almost created a candle covering 12 hour of bullish movement. So we put a stop loss here, we target on the line, or maybe 1 is to 2 or 1 is to 3. Such trades where you can't really determine what your target is, you try to take 1 is to 2, 1 is to 3, not more than that, because the price might easily reverse. So you can see it was a very easy trade right here. It did a touch and 1 is to 3. Now again, there's a price coming in on this trend line and then rejecting from right here. Now, if I go down to a smaller time frame and try to catch a perfect price action, okay, my stop loss is a little above the trend line because I want to cover the wicks. Now, there's a way to take these trades as well on the, so you can see there isn't a perfect touch right here, but I can see the distance the price is traveling above the line. You can see this is small distance right here. There's a small distance right here. Now, when I'm taking this trade, that means the candle is going to give me a price action right here. Now, this is a very big 4 hour candle. So I'm expecting 2 to 3 candles it's going to take for the price to come around this level. I'll keep a stop loss right where it is, where there's a distance around this place and it's creating a wick right here. Now, if the price goes till here, that means it has created a very huge wick, and that means my trade is wrong. And that's completely fine. Now again, I target around 1 is to 2, 1 is to 3, and I scale my target. It will give me maybe 1 is to 1 or something like that. But that's when you see the trade is also flipping, right? Rather than trying to take trades on the breakout, what you should rather do is take trades with the trend, because a lot of times there are fake breakouts in the market and the price creates proper structures and then comes back in. But when it's following proper trends, it's very easy to take these trades. Trade with what most of the people are doing rather than waiting for a breakout, waiting for special candles, special reactions. Don't do that. Do what is common, right? Don't try to be over strategic about it. Rather trade with what people are doing. I hope this is making sense. Now, again, on these levels, you can see there was a price movement coming up, touching this right here. And again, there was an entry right here. Okay. So we could have figured an entry right here, not here, because you can draw a trend line from right here. But again, this is not a very big trend. This is a very small trend. You shouldn't go for a trade when you see a trend like this, 2 touches, 3 touches, small price. Don't just go for it. Wait for price to give you enough information. You should be able to figure out proper support, resistance, and based on that, you should take decisions. Let's zoom out. Again, this was moving in a trend till here, and then it didn't. This one was using this as support till here, and again here. You can see if I draw a trend line from this place to here, I'm able to get all the touches. And if I do the same thing again from the back, there's a channel, but again, it's opening up. This channel is very big, right? But definitely it's a trend line. The price is using this level as resistance. Trend lines are just like support and resistance. This is acting as resistance. This is acting as support. And really good trends, what I like about good trends is they move in kind of a 45-degree angle, like this one right here, where slope is like this. Yeah. Now this one is a little less than 45 degrees, but If it moves in a 45-degree angle, I have seen the price action has continued for longer durations. Okay, very longer duration. So 4 hour time frame is not actually the best time frame to get a trend, because it's going to give you small trades, right? But on daily time frame, if you're able to find out, for example, right here, on daily time frame, when you're able to find out a trend, it gives you really smooth and very big trades on lower time frames, 1 hour time frame, 2 hour time frame. It's going to give you back huge profits. And that's what your target should be. Right here, from this point to this, let's say when the price action was right here, if I am able to draw a trend line on this, yeah, all right. So second touch, when the price is touching right around this, so second touch has been done and the price is here, and you're analyzing this pair. And if you see a price action like this, where two touches has been acted as resistance, and now the price is accumulating around here. Now this might act as your third resistance. And now what you do is on the lower time frame, let's mark this and cut this out. Start new. You go down to the lower time frame, you see what is happening on 4 hour time frame. Now the price exactly touched this level around this here, right? And there's a support right here. If you see the local support, there's a support right here. Now what you do is there's one touch here, two touch here, and this one is your third touch. What you do is you wait for the price action to break below this support, break below this support. And now again, what you need to do is you need to wait for the price. So there are two ways. Sometimes you might get the trade, sometimes you might not. So what you do is you wait for the next candle to print, retest this level. I didn't know this was going to happen. I just cut it in front of you, and now you can see it is retesting. And I'll tell you why I'm waiting for this, because if I try to put a stop loss around this level, imagine 173 pips on Euro USD. That's larger than most of the daily candles, right? 173 pips is huge. So definitely I can't take a trade like this. So rather what I do is I'll wait for a retest and then continuation. And right here, there's a rejection, but the price has closed just around here. Now what I do is I can go down to 1 hour time frame and wait for a proper close below. Yeah. So there's a very good close on 1 hour time frame. Again, what I'll do is I'll take a entry right here. Now my stop loss is 54 pips instead of 173. Now, what should be the target? Again, it can be based on trend line, it can be based on EMAs. So first target is this, where the price is doing something like this, but again, it's not giving me 1:2 or something like that, and it's a trend. So what I'll do is I'll try to target the low of the previous trend. I'll go down to 4 hour time frame, make this bigger. Eventually, price on the 1 hour, it did this, but it never came back, because as we saw on the 4 hour time frame, the price was very huge, right? Now, let's move these candles on 4 hour time frame. Eventually, it hit our TP, right? That's how easy it is to take a trade based on trend. That's how you take a stop loss. Imagine most of you would have thought right now that I would take a trade right here from year to year. But instead, I saw a different opportunity. I saw that price retested this level and then continued down. So it gives me a history of price retesting. It's a very recent history, and definitely it might do it again. So there's a chance that we might have not gotten a retest, but we got the retest, and now the price has moved smoothly down. I hope this is making sense to you guys. This was a 1:4 trade. So around this period, even I was not a good trader. All of this information is new to me. So yeah, see your question, can we take entry on break of trend line? You can definitely take trades on break of trend line, but I do not. Instead, when there's a break on the trend line, I'll rather look for a support and resistance, because a lot of times what happens is, let me give you an example of AUD GPY, which recently happened, right? We were looking for a trade on this AUD GPY pair. Just cancel this. Wait, leave. Yeah. Imagine there was a breakout right here. There was some breakout right here. And we were looking for a trade. I had analyzed this pair, and what I said was, I want the pair to turn bearish first. Okay, it turns bearish. The price closed here on Friday. Turn bearish first, and then do small price actions, and then create a bullish structure so that the stop loss is not big. This was the thing I had said on the analysis video. It's there on YouTube. So now you see the price didn't exactly do that. It didn't create a lower low for me, and then it just went up right here. That's why I didn't even look for an entry. But this area, you can see it acted as a really good support. The price moved from here, the price moved from here. It took time to break this zone. And you need more confirmations when you're trading above for the breakout of the trend line. More confirmation, some support and resistance levels, and based on that, you take the trade. Because definitely you're trading a breakout, but imagine the price came here, gave a breakout, came down, retested this level, and pushed up. This 2 hour candle has covered price action of three bearish candles. That means 3 hour price momentum is eaten up by 2 hour candles. I hope that is making sense. This is a very good candle. But again, price did nothing. It resisted and moved down. Resisted, moved down. Again, this one was a better breakout than this, because the price action is above this. It came down, retested, moved up till here. Imagine a lot of traders would have taken this entry. But what happened exactly? Price failed to break above. It's now again in the trend. Instead, what I look for is entry like where I take a entry from right here, right this places, right? I hope this is making sense. Previously, I didn't see this pair, this trend, and these trades weren't so good for me, because it did went up, it never went in the drawdown again, but I had closed it right here on my break even. But now I see the trend. I'm looking for an entry right around this place. In the next analysis, it's going to be there. Unless Thursday, Friday price moves up. So rather than taking an entry on the break of trend line, there are so many pairs. Rather trade with the trend, trade with the people, what they are doing. Don't wait for special price actions. These breakouts, most of the time, they are all just exceptions, and you don't make an example out of an exception. When we are taking a trade based on 4 hour trend line, when should we take a trade? 4 hour candle close, after retest, or lower time frame close? So on the daily time frame, I go down to smaller time frames just because I want a tighter stop loss. On the 4 hour time frame, it depends whether I want a tighter stop loss, whether it's fitting my stop loss or not, whether I should take this trade or not. There are these questions. So 4 hour candles, for example, there's a very huge candle right here, this one. So you shouldn't take a trade, a short trade from these candles, because again, that will be a huge stop loss. You won't get a good risk to reward. Now, these candles, you can see there's a huge wick, but it's not that big price action compared to where the target is. At some point, the price is going to hit that target. Let's say I take an entry. I'm not looking for structure or anything. I'll just show you an example. Let's say this is the structure change. 1 hour lower high, lower low. I'll just zoom it a bit as well. Right, lower high, lower low, price moved up, again price moved down, and then there's a bigger breakout. Let's say I take a trade like this. I try to put my stop loss below the low, trying to cover as much as price action. At some point, the price is going to hit a target, right? If my stop loss is as big as 4-hour candles and I see a change on 4-hour time frame, that there's a change of character, imagine my stop loss would be something like this. If the stop loss is something as big as this, then it's going to hurt me. So on the trend lines, you trade differently. You go down to lower time frames, you make sure the confluences are adding up. There's a proper change of structure. A lot of things needs to play out nicely, right? So 4-hour time frame only when stop loss is fitting your criteria. Else you trade on 1-hour time frame. You only look for structures on 4-hour or an engulfing based entry. When there's trend continuation happening, let's say you're trading based on trends. So there's an higher high, higher low. When there's a 4-hour candle and it's giving you an engulfing candle, that it can be an entry on 4-hour time frame. Because there you see a great price action and a continuation to the way the market has been moving up. So I hope this makes sense. AUD JPY, I have already drawn this trend line in front of you before as well in my previous sessions. Just make sure that when you're drawing trend lines, you make sure you try to cover the touches. You try to cover the touches. That is the most important thing as of now. And a trend line which has similar touches on both sides is a better trend. I have seen that. That's my experience. Some people might say otherwise, but this is what I think. If it is touching the same kind of, for example, right here, one, two, three. So it's touching the same targets. It's moving in a really good slope, and the price has given a breakout. This is giving you a steady momentum, a very steady momentum from right here. So if you see channels which look like obtuse angle or acute angles, then there's something wrong because the distance are getting bigger. In the earlier versions, I did that drawings where it was creating more of an obtuse angle, right? So what they do is there's a lot of price action to cover when it goes deeper, hitting that resistance. Now it's going to go way deeper and then moving up. So you're not able to establish what it might do now. Eventually, it will be very big. So those trends are not good. These trends are really good. I like trends which react on the same angles. I hope this makes sense. I want you guys to draw these lines. I'm trying to give you the basic information on the basics of it. When you start making mistakes, right? When you respond to me, when you share the screenshots, that's where I learn that what you need to learn exactly, where you guys are going wrong. That is where I'll be able to help you more. If I just teach you all the things, you'll just get confused. And even I don't have everything in my mind that readily available for you. But when you come back with the problems, with your examples, what you have practiced, that helps me, that gives me a clear picture of what is happening wrong. And then I can explain to you. So we are done with the session. I hope you liked it. Come back to me with the screenshots of the trend lines, all of you. Every one of you, please do that. Are there any questions? Can we trade based on trend line in 15 minutes? You can definitely trade based on 15 minutes, but 15 minutes is going to give you a lot of fake outs, and that is not the swing trading way. You can't trade on 15-minute time frame if you want to be a swing trader, because when you go down to lower time frame, your stop loss will be hit very quick, your take profits will be hit very quick, and profit hits are very good, right? But when your stop loss gets hit that quick, that means you want to get back to it. And imagine it created a wick and then moved back in the trend. Then what you try to do is again take a trade, and maybe that will hit your stop loss again. That's how you start breaching your account, blowing your accounts. So smaller time frames is not a good thing. Swing trader, let your trades take 1 week, 3 days, one day. Sometimes it's fine, But 3 days, 5 days, maybe 2 weeks, that's completely fine. That's how you master your psychology. That's how you understand the long game of swing trading. That's how you understand how long your account can sustain. If you're able to sustain $100 for more than a month, for example, November, I started this challenge $100. Now it's $1,140, right? Every trade taken in front of you guys, that's because of swing trading and my patience. If I don't keep that patience, if I overtrade or do anything like that, it's going to hurt me. All these ideas you get on 15 minutes and everything, I get the same exact ideas. But the only thing is, I don't react to them. I see so many trades in a day, so many trades. And honestly, I feel greedy at that point that I want to take this trade. But I also remember the painful memories of what I've been through throughout the past years. And that stops me from taking this trade. Yeah, patience is the most important thing. And you won't learn it by just me telling you that. So when I say the word patience, it won't mean a lot to you. And it's just a very simple word. But when you master this, when you understand, when you wait for very long, when you wait for, let's say you have a trade and you see that trade coming up on Wednesday and you have been looking at the charts from Monday to Wednesday, and even though so many different ways market try to give you an entry and you don't take that trade just because you were able to reject the trade. Rejecting the trade is more important than taking the trade. If you are able to see that these are the reasons market might hit your stop loss and you have that reasons and you're still taking that trade, right? Those are very valid reasons and you're still taking that trade. That means you can't be a profitable trader. But when you start reacting to the logic where you see that these are the reasons that your trade might easily hit your stop loss, and even though this big huge candle doesn't mean anything, even though it's going in my direction, it hasn't done these confluences that I was waiting for. That's when you become profitable. You have to do all of this with patience. My journal is the trades that I take. All these positions that is there on the charts I've taken so far, that's always there. Sometimes I remove the bad trades because I want to keep myself motivated. But I keep these trades for a reason because I want to understand what my stop loss should be, what kind of entry I took, what kind of direction I waited for, what kind of support and resistance, or maybe EMA based trade I took. That is to analyze, and that is everything there in the charts rather than writing it in a journal. I just look at a pair, and there's a lot of history with it. A lot of people say that you should journal. Maybe you should. It's your personal choice. If you want to, you can. So the question is, if I'm getting trades in two pairs, but my analysis looks stronger in one pair, should I open one trade or both? So that is completely dependent on what kind of confidence you have in the second pair. If you're not getting that kind of confidence, you shouldn't take that trade. And one more thing, which is a little contradictory to what I said. If you have been just following your strategy, it doesn't mean how much confidence you have on a particular pair. If it aligns everything perfectly, whatever you analyzed, all you need to do is take that trade. Just take that trade because doesn't matter how strong the price action looks or what it is looking, your strongest pair will hit your stop loss. It might hit your stop loss. That's what 60% or 70% or 50% win rate means. It might hit your stop loss, doesn't matter how good it looks. For example, Euro GPY hit my stop loss, gold hit my break even, still moving up now, but that's completely fine. I'm out of the trade. USD GPY as well moving down again. I'm out of the trade again. I'm not looking for entry in them. But that's the thing, right? One trade loss, two trade profit. If I say XAUSD is not at around this higher highs, I just took the entry at a wrong level. But I had analyzed this pair on Saturday. It did everything I wanted. And if I'm not taking the entry, then it's wrong because I'm reducing my win rate now. I hope this makes sense. It doesn't matter if your trade looks A plus, B plus, C plus. They are just trades. Any one of them can go wrong. Great. So I guess we are done. I'll see you guys on Friday now. Make sure you send me the screenshot. Everyone, please share the screenshots. Do as many pairs as you can because it's only going to help you. It will only make you better. All right. Bye.